Whew. I just learned something today, and I wish I knew it a bit sooner. I believe this is journal entry 4. A bit behind just because I've been super busy with work. It's the weekend, so I went golfing. But anyway, this journal entry, I'm talking about tax work. There are a lot of things that I'm going to be doing for the following tax year. And so I just kind of want to dive a bit deeper, get a bit more organized. And here's one of the biggest tax benefits that I found, and that's being taxed as an S Corp. Okay. And so what that basically means is I already knew what this was, but I didn't understand the benefits. So for a typical sole proprietor LLC, if you live in Washington State, that's 1.5 B&O tax on all the revenue. So that's the sales tax that you are charging your clients. Let's just say you profit 75K or 60K or something like that. You're probably going to be around that 27% tax for federal. Okay, and that's on all your profit. That's what you're getting taxed on. And so the 12% is your just average federal income, typical. And then you have a 15.6 self-employment tax. So those are the two that, make up the federal tax. And so the benefit of an S Corp is that 15.6 self-employment tax, you don't have to take that full hit. And so I'm going to talk to you about something called distributions. I always knew that S Corps had distributions, but what I didn't know is that you can actually give yourself the distributions just as if it were a salary, but it's not technically a salary. So if you pay yourself a reasonable salary, you can pay yourself those distributions, and those distributions, meaning the money that's not your salary, will be exempt from the 15.6 self-employment tax. And so what I mean by reasonable salary is, let's just say that your business profits 60K for the tax year, okay? A reasonable salary that somebody would typically pay themselves is, 35 to 40K a year, okay? That leftover 20 to 25K, you can actually still pay yourself, still put in your bank account because it's technically, not income. So that's avoiding the 15.6% self-employment tax. So, you're avoiding probably like a few thousand every year on taxes. And these are just the little tips and tricks that little guys have to know to kind of, keep building their business, and that money that, that you're saving from not paying that self-employment tax on the distribution. So you can go ahead and still put that in your personal account if you need it, or you can just keep it in the business account to, keep doing bigger purchases. And so for myself personally, I know that for real estate, I want to have a lot of cash on hand. And so what I want to do is have an S Corp, so that way I'm saving money, because it's after my salary, the money that I have from the business bank account isn't going to be falling under that 15.6 self-employment tax. So I can pay myself that money without that 15.6% tax, and I can slowly build my cash reserve to buy more assets. Anyways, that's journal number 4. I'm doing a lot of research for for the next tax year. So I'm, doing more research on 1099 workers. I'm doing more research on, filing taxes as an S Corp, and sort of the requirements for all of these and the benefits.